Good day. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, September the 14th, 2024. Now, where do we begin? I'm going to begin here with the NDX, and I'm also going to start on the 3-year weekly chart. There's not really anything to be adding to our weekly chart, where I'm continuing to just take into place that at the high, currently at 20,691, I'm rounding it up 3 cents, 20,691 on July the 8th, did complete the minor third wave. And then since that time, we have really two alternatives. One, that the minor wave 4 completed here on August the 5th at 17,435. The alternate would suggest, or the equivalent, so because they really both still are running neck and neck. The equivalent other count would suggest that we are still within this minor fourth wave, completing wave A, minute wave A, at that August 5th low, minute wave B at the August 19th high, that would be 19,938, we'll call it 39, that's rounding it up 11 cents, and that we're really either still going to be working on a C wave down, which would suggest we're going to return very quickly back down towards 17,254, or to at least below 17,435. Now, 254 would do the trick. That would get us below. As long as we come down in 5 waves, we can label it wave C. Now, the, again, alternate within over would suggest that, again, we completed wave A of minor wave 4 and wave B of minor wave 4, but what is happening now after is forming what possibly may be a triangle. So that's the weekly. Let's take it down to the daily. If we take it to the daily, we can see that this basically might be A, B, and then we get a 1, 2, 3, 4, 5, and that's a C. And that could be wave C. But then we got to get at this. Is this a D wave? It certainly has come up high enough. But what the outcome would suggest is that we flip and we drop in an E wave. Now, we can draw very quickly, we can just put in some trend lines. If indeed this is a D, we connect B to D. And then if this is the trend line, we connect A to C. Oh, that one. And that would put us right there. So in that case, yeah, okay, we can go with that. A, B, there's C, connecting A to C, so we can see the triangular formation. But it would suggest that this E wave is going to come down. Let's just kind of take a notation. Normally we would use for E, we're going to take the fibs off of the D. So that would be here. So let me just change this so I can get it right away. We're going to go from that low to that high. And then we can see inside here. And let me just kind of open it up so we can actually get our levels. So if this is C and this is D, then we're working on an E wave. Most common, 3A2, 50%, 62%. So we would get a quick drop down in an ABC in and of itself from 19,115 down to 18,842. Now, possible? Yeah. But as we also realize, and this comes via not an Elliott view, not a Fibonacci view, but from a flows type of views. Flows, what I mean, capital flow, the options flow, and the gamma. And with that reading that we have flipped, here pushes into negative, here pushes back into positive gamma, here pushes back into negative gamma, here pushes back into positive gamma. So we're currently in a positive gamma atmosphere. And what that does do, or actually, let me just change the terminology. Risk off, risk on, risk off, risk on. That's the trade. So we remain in a risk-on trade atmosphere, which is a positive gamma atmosphere. And in fact, we've now gone above a level that puts us into that positive gamma safety zone atmosphere, where it might get a little bit stronger in being put into place as the market holds these areas. So what we would be looking for, and keeping that in mind, is that for a volatility trigger to get triggered, for a large gamma level to break and then throw that through the volatility trigger. So we need that volatility trigger, which is coming in at a lower level now, because what we're looking at is switching the volatility from up to down. So in other words, we're switching it from risk on to risk off. And that's really what happens when that volatility trigger gets triggered. And being that it's below the market, it's going to trigger risk off. And when it's above the market, it's triggering risk on. So right now, as we come in today, as I come in to do this, I will, let me just move that, put this. Right now, coming in the NDX, the volatility trigger, wow, is at 19,030. 19,030. Now that's a lot. That's pretty far when you consider we closed on Friday in the NDX at 19,556. So we'd have to drop 500 points for this thing to flip it back to a negative gamma atmosphere or a risk-off type of a trade. Now, that level is going to be a little different in the Qs, and it's a little different in the index. Now, here in the futures market, I meant. Now, what we got coming up, likely starting on Monday, because don't forget that next Friday's expiration is the monthly expiration. Well, guess what also expires there? The future, the NASDAQ September future, ceases to have life after next Friday at 4 p.m. So what happens in front of that occurrence is that the futures roll, which likely began on Friday, don't know exactly how hard that is. And what I can do, I'll just go over and I switch and I look at the futures market. We still had plenty of volume on Friday at 464,291. Excuse me. So what's going to be important is what really comes off early. Because my stance has always been you roll and you use the next contract out once the December future has the greater volume over the September. Right now, they're kind of a little bit ahead, but I'll tell you, Thinkorswim, they mostly do that. And they're not the only ones. There are several that will have started to roll out. I believe that TradingView will roll out and start showing the December contract versus the September. Now, I would be expecting to see it, but right now, I will have to make a choice on Monday. Which future do I want to trade? Do I want to start trading the September future? And because the market obviously should be tighter than this, but it's going to be which has the tighter market and which way the market is really kind of moving towards. Because volume, if the volume remains higher here, it's going to be easier to trade that one, trade the September contract. So normally I wouldn't move out myself for trading purposes until I see the greater volume in December versus September. Now, having said that, the cash market could care less, right? It's not the future, it's the cash. So it doesn't change. So within the cash market, we're looking like it needs to have at least 500 points plus before we would slip and move back over into a risk-off atmosphere, a risk-off trade. So how does that bode for which count we actually want to take? So in essence, yes, I do think that we still can get a quick wave E in. Because what is the resolution for once this triangle and minor 4 would be complete? Well, it would be a thrust up and out of the triangle. And we'd be looking technically for something that, we have 19,933 up here at the top. We actually can take it all the way down here to the bottom because that's the breadth of the triangle, the width of the triangle, and we're down at 17,435, 19,000. So we still got, like it would launch like over 500 points. Is that possible? Sure. What do we got going on next week? Let's just say, just as a given, let's just say Monday and Tuesday, the market does go, just gives it all up, comes back down that in an E wave, triggers along the way, excuse me. I mean, if it comes down to the 50% marker, it's going to trigger the risk off, right? If it does that, it's going to be incredible because then we're then confronting risk off would be we start to really hit this market. And we wouldn't be expecting it to come down and break below the boundary of the triangle. We'd be expecting it to stop, turn, and race back up. Well, what could create that? Well, the fact is that the Fed meeting and their decision comes Wednesday. Now, we already know, we're already trying to factor in, how is the market really going to respond to that? Well, to tell you the truth, I think that there's been enough talk about, once we get the news, is it going to be a buy the news? So in other words, instead of buying the rumor, which I don't even know if they're even doing that anymore. The rumor is we're going to get a rate cut, to now the news is we are going to get it. The rate cut is going to happen. So the question becomes, is it going to be 25 basis points, 50 basis points, or third choice, not at all? Third choice, not at all, would actually drive this thing into our other scenario where it's not a triangle. The third would be that it is A, B, and this is 1, 2. I'm tumbling down out of this. And a third, a 4, and a 5, and we end up down here before we finish minor wave 4 and start on minor wave 5 up. That is our third option. And I want to make that clear because most people aren't even considering, that they won't do anything. But here's the other gig, the other thing that goes in there. I think a 25 basis point, which is already priced in, is to sell the news. And if they do that, we still can start to drop, right? We still can drop it back into a negative gamma atmosphere, a risk-off trade deal. And that would force this back down and still give us a minor 4 down here. So it's not possible to really tell. All I can really do at this stage is show what our possibilities are. If we come down in an E wave and the algorithms really trigger back to start taking us higher, and come Wednesday, as the Fed announces at 2 p.m. Eastern, a rate cut of 50 basis points, surprise, more than expected, algorithms may just trigger to the upside. thrusting us up and out and into minor wave 5. From here, we can still consider that. I'm going to leave the triangle pattern on there, removing those fibs. All right, remember we had just below 19,000. That would be a good level. 19,000 and a little bit of change is where the volatility trigger is. Smacking the volatility trigger and holding it is not going to trigger anything. Smacking the volatility trigger and getting triggered to go below is going to swing us back into risk-off trading. Algorithms do it automatically, folks. This isn't a conscious decision and somebody's going like, well, let's just see what it does. Algorithms are that's already programmed in. In fact, most of our trading, if not 100% of our trading, is all algorithmically generated. So when we get these risk on, it's because they're putting it together. The algorithms are doing the trades. I'm just saying. So here we sit at this crossroads. So we may have very little on Monday. But again, we might just start to make these moves on Monday, maybe even trigger that. And then, but still at the same time, come in on Wednesday and at 2 p.m. Eastern, get that surprise of you got a 50 basis point easing, and they turn it and they fly it higher. That would be an expectation for if the market is still involved in a triangle pattern to put in the lows or to put in the marker for minor wave 4. Yes, it's going to be up pretty high, but it's a triangle. So in the triangle, wave C does not take out the low of wave A. It doesn't even come close because it's a triangle and you can see the formation. So it comes within, and I believe it did come within the fibs for that wave. Wave D now, so here's the other side of how we got to figure this. If we come in on Monday and the NDX gaps higher, well, triangle's off. Then what is it, Michael? Then it's ABC, minor force here, 1. And I'd actually have to count it this way. 1, 2, 3, 4. 4 did not overlap wave 1, got close, but did not do it. And that we're racing higher in a 5th wave. And that 5th wave, we'd gap up just to get it started. And the expectation would be that we do move to a new high above 20,691. Now you can start and look at your fibs in several ways. Now, these two fibs are for a continuation of minor wave 4. Color, see, coordinated. Now, if we're looking for a wave 5 up, I could do several. And I know I'm going to leave these on, but you're going to be looking at something that might look like this. So that's 1, and it's going to go over to 4. See, 2.618, 20,820. 20,691, 20,820 bills the bill, puts in a 5, and we're done. And then we start again. I'm just saying how it all can fit in. 1, 2, 3, 4, 5. And if it's a surprise and we get 50 basis points versus 25, and some great news from the Fed and the conference, it could do it, right? Next week basically is kind of light in terms of what data comes out. It all is going to wrap around the Fed on Wednesday. And we got a purchasing managers one day. We've got, I think, some retail. We've got some consumer. Maybe that's the week after. Hold on. Let me just double check. I will do a quick check to see what we got next week. Empire State Manufacturing Surveys on Monday. Retail sales on Tuesday. Industrial production capacity utilization on Tuesday. Business inventories on Tuesday. Home builder confidence on Tuesday. Wednesday, Fed. Thursday, initial jobless claims, Philly Fed manufacturing, existing home sales, and U.S. leading economic indicators. Now, that U.S. leading economic indicators, I don't think is really going to have all that effect on the market based on Fed decision on Wednesday. That's just my thought. Okay. So these are everything that I'm looking at, I believe are possibilities. And I've just laid out what can happen in between and how it can happen. So that's here. We've taken it as if this is only A, B, C, D, E, launch. We got that one. Or ABC is minor 4 down here. And we have 1, 2, 3, 4, 5 continues, launch. There's where we get to. And that's a new high. We got one more above that. And I can put it in there. If it really is exciting and they're just going to take it and they're going to go and take a run with it. Minor wave 5, 21,745. That's the cash. Okay, so let's go take a look at what could maybe the futures market look like. Now, before I leave, let me pull this back open. Daily, let's take a look. What are the moving averages telling us? They are boring. We had 1, 2, 3, 4, 5 days of up market, one spectacularly nice rally. The 50 is flat as a pancake. The 20 is sitting underneath it. The 13 is just breaking above them, and the 200 could care less. That's what your moving averages are telling you. We're all waiting for the news. We're all waiting for somebody much bigger to please lead the way. One direction or the other, lead us into the promised land, so to speak. And so that's kind of where we sit moving average wise, which is why I'm giving you 1. That's if this is all done. 2 is if it's all done, what this would count out as. 3, if it's still in the triangle pattern, what we can look for. Those are our choices. Oh, no, 1 is if it's not a triangle pattern and it's A, B, and we're in wave C down. I gave you that one. So that's 1. 2, that it is minor wave 4 complete here. And we're in a 1, 2, 3, 4, and this would be a wave 5 up and it continues. And then the third is that it is still in minor wave 4, but it's a triangle pattern and it's an A, B, C, D, E launch. That's all 3. I got us covered. 2 favor upside, one does not. And that would be that it's a continuation to the downside. Now, I love the opinions. As long as they're constructive, please leave it in the comment section on what you think and maybe which one of these 3, or if you have even a new one, please add it. But be more, not just like, I think it's just because, or it's this and it can't be that. Give more data. Support your thesis, so to speak. All right, let's go over and take a look at the futures market, which you can see it's already rolled on Thinkorswim. So wherever, accordingly, on Thinkorswim, I'd be looking for a gap up of at least 235 points. That's the equal. There's $235 worth of premium in the December future versus the cash market. And why? Because it's 3 months, right? 3 months until that expires. So you got to pay interest, and that's the interest. You get to do it up front. Now, looking at the futures market, I'm going to go this way and just say N24, because that'll give me that chart. See? So all I need to do is got to take a look at that. If this is 3, is it all a 4 or A? B, C, D, same deal. But you just got different levels, right? So I'm going to continue to go here and go back because I already have all of that labeled, right? But just so that you know, when you're looking what it's going to look like, it doesn't look any different. You're just going to have to add $235 to the price, to whatever you're dealing with. Okay. So let me fix this guy. So put this over here and this. Oh, it's already set. No, not at that. I need to just activate it and bring it down to here. There you go. And this, because we're going to consider D as done. So, and I'm going to activate that. That's there. And I'm going to put this over there. All right. So there we have it. Now, pull this in a little bit so that I can see it. And here a little bit so I can see it. Let me go out to that 3-year weekly because we got the whole shebang. It's a big picture, right? Nothing's really changed. We're all very focused on right here. And that 4 is down below because I don't think it's done yet. If it is, I'm going to put it right there. If it's not, then we have an ABC. This is a D. We're going to come down in an E. Let's get out of the weekly, go back down to that daily. Now we want to look to see, well, what do we got? Well, on the futures basis, we're just going to add our fibs right back up to that high, bing, and then open this up so we can see what's inside. That would be the first one, right? That's saying that this is A, this is B, this is C, this is D, and we got an E. Well, E brings us down to, 50%, 18,958, 62%, 18,812. All right, let's balance that against where is that volatility trigger when we're looking at the NQ? 19,254. Okay, 19,254. 19,254. So it can actually even get down to the 382 on an E wave and still break that volatility trigger. So kind of high when we're looking at the futures market. Now, whether that adjustment we're going to have to add, right? Because I think that the levels that we're giving are still based on this September future. So if we're looking at 19,104 plus 235, it's 19,339 via the December contract. That's just an estimate, right? I'm just adding the premium to that level basis this chart, right? Because this chart is still showing us that we close at 577, not 738. So this chart will gap. No matter what, we're going to get a gap on Monday or tomorrow. Now, reviewing all three. If this is 3, that's 5, that stays the same. If this is ABC 4, and then we got 1, 2, 3, 4, can't. See how in the futures market, it disqualified itself because it went too deep. So it can't be that we're in, a different, that this is 4 and it's 1, 2, 3, 4, and we're off to the races. Now, what it could be is 1, 2, and then you're going to have to really work this out. 1, 2, and that's on my daily. Let me go down to the 4-hour and see if I can do it because I know I've done it. Go right here. So this is kind of nasty, ugly, but I can get 1 up to here, and then we get an A, B, C, 2, 3, 4, 5. It's not pretty, but you got to get somebody who might be able to say they can do it and accept it. So is that a 1? And this is a 2. Okay, that gives you the room that you needed to get down close without overlapping or without breaking below the start of wave 1. And then what do we got here? 1, 2, maybe still in 3, but we got 3, 4, 5, and we're heading to the moon, right? So in other words, minor wave 4 done at this level. Wave 1 of minor 5, wave 2 of minor 5, and we're just in, right? Get this. Okay, now I'm just going to add this fib. This one would be for any type of a pullback, but now I'm going to pull it out because that goes with the triangle pattern. Now let's take a look at the next. We're just, nope. I got to change that to that. And now I'm going to go here. I'm going to go down to here. What are we looking for in a wave 3? Wow. Wave 3 would be equal to 1 at 21.25. Guess what? New high. But if it's a third, they're likely going to come up to here. All right? 1, 2, 3, 4, 5. But that would just be a guesstimate. These are just guesstimates. Now, this is basis Friday's close in the September future. If we're going to be working and thinking December, add $235 to that and to that. And now you've got these different levels. So before, when we were still working with this, even in the cash, you would start to think, how can the NASDAQ get all the way up 22 or 23,000? Well, by adding $235 premium to the future. That would be one way. So it's an adjustment that not only mentally we have to make, but Fibonacci-wise, we have to think, how would they ever get up there? This is how, and it happens time and time again. Now, that's covering 2, right? Wave 4, complete. 1, 2, we're in 3, and it should. And here's the other side of this coin. If it is, I would not be looking for this to come down. I would think we'd just start launching. We just keep launching. So what that would suggest is that, once again, I'm going to go back over here, and now I want to just take a look to see, where is the call wall? The call wall is at 19,674, but that's basis the September future. If I have to add, and also huge amount of gamma sitting right at that level, basis the now the call wall in the cash market is at 19,450. And that's also where a very large gamma position sits, and one is just above it, 50 points above it at 19,500. So let me go back out of this. And so going back over to the NDX just for a moment, 19,500. We're there. We're there. We're breaking the call wall. And we start heading up, we'll be breaking it even more and more. So that I should have looked at before. I apologize. So it is breaking. Let's see what they want to do come Monday. Do we want a gap? In which case, this is out. This is going to be 4. And likely we're going to go this way. All of the other two still stand. We don't know. We got to see how things pick up and come out tomorrow, and then again on Monday morning. A lot of stuff can happen. So back over to the futures market. I'm telling you, this is where it starts to get interesting. So we still have those 3 possibilities, all dealing with the same chart. So 4 could be here. Or we go down right from here and we start to sink. We did come off the high. The high on Friday was 42.25, 19,005. No, excuse me, 19,577. So we came down 73, 72 points. So it kind of came off that high, which again, that was after hours. So this possibility of where are we going to open? If they don't open this up higher, then the equivalent, right? So now we got the equivalent. If we do open and we are going to be trading that September contract, don't forget to subtract the 235 points to get your levels on the cash market. So what do we got? The two that I think are favored. Well, actually, all three still carry the same amount of weight. We could get a quick E wave and then blast, right? Minor 4 done over here. We blast in the fifth. We could get this blast now, and this being a 1, 2, 1, 2, and we're going to blast in the 3 of 3 type move, and we're going to go right. I would think the blast would take us above 20,000, and that's an honest response. We go right up. So in other words, risk on just explodes in our face. Because don't forget, what also happens is because we had an expiration on Friday, I don't remember, I didn't really look to see what the size of the expiration was going to be, but a lot of gamma gets released. It gets released, positive and negative, but it gets released. So we're going to see what it all again looks like come to Monday morning, when I'll get a new set of levels, and that'll reflect expiration. And now what are we confronting? So what it also releases is a lot of volatility, which may continue to push vol lower. So a lot of stuff. So we could see an increase in the volatility trade, the risk on trade. And if that's the case, market just walks itself higher, and it goes, and it just keeps going. So all facts, everything included, we can get that drop down in an E wave, right? So A, B, C, this is D, we get dropped down in an E, and then hit a marker and pop, boom, just finish that minor 4, and we start to rally with intensity. Or we kind of hang out down here, and then Tuesday, Wednesday, come Fed day, we get a cleaner response from what actually will happen via the Fed. And we got all of our markers put into place to determine. We may not get back above here. Maybe we may just hang out down in here for Monday, Tuesday. And then come Wednesday, 2 p.m. Eastern, when we get the whole shebang, is it 25, is it 50, or is it nothing? Remember, I think 25 could be a sell the news. And we go down. 50, surprise, we go up. Do nothing. You don't even give us the 25, we head to the sewer. Those are my thoughts, those are my feelings, and how I trade it, of course, will be how things I see in front of me. But I'm just laying it out. If this is the completion point, 1, 2, 1 of 5. So this is minute wave 1 of minor wave 5, minute wave 2 of minor wave 5. We're in the beginning of minute wave 3. And this could be 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. The whole market just needs to get above. To complete this thing, just need to get above 20,984. That does it, right? That would just be wave 3, right? That's the gauge we're putting on wave 3. That would certainly do it. And if we get a 3 and a 4 and a 5, I actually do think we can get above 22,000 to complete this whole cycle and to get us up to the completion point for intermediate wave 3. You know, talking about that larger picture again, let me take this back out to that here, right? We are looking and working on the minor wave 4 of intermediate wave 3. We get minor wave 5 up and done. It completes intermediate wave 3. And then we get another intermediate fourth wave decline, which should be swift, quick, deep in comparison to where we're going to end up. I do feel we're going to end up closer to 22,000 to complete intermediate wave 3, and then we're going to drop. And the deal is that we drop back down into this. Bring it down to the daily. We drop back into this territory because here is the fourth wave of 1 lesser degree minor for looking for an intermediate 4. It'll be wherever this one, we put that marker for the end of that is where I'd expect intermediate wave 4 to come down to. So all in all, we're going up and down, all to within. We go up to new all-time highs, but come back down to that same area that we were in August. And I want to tell you how many times we're likely going to trigger risk on, risk off in the process. We've seen it now here, right? Risk off, risk on, risk off, risk on, risk on, risk off. We could trigger the risk off before we get out of all of this. And if we do, I think just in a day, it might be risk off, and then the next day is risk on. Right? Because maybe say we do this Monday, Tuesday, we go into risk off. Wednesday, they like it. Algorithms trigger us right back into risk on. It's going to be hectic. And that's why I keep trying to tell you guys that just following the flows. I know a lot of people think it's garbage, but it really isn't, because you have to really put this one into our thinking caps. Is it truly, are options the underlying, or have they become, are the options the derivative, or have they become the underlying? And the equities are the derivative. And the equities are the derivative of the ETF, of the index. And the options are the underlying to that derivative. It's a weird concept, but if we think about it, what truly is controlling how we're trading and what gets traded? It's all algorithmically controlled, so it's not like you got some genius sitting somewhere plotting this all out and pushing buttons. That's all programmed. It's just done. It's automatic, right? All these levels get put in, and it just happens. How we trade them is by paying attention to everything and the flows. I have to tell you, as a day trader, when those flows get triggered, when those volatility triggers, or these large gamma positions, or these other big lines of support or resistance get triggered, there's some sweet trades that come out of it, I gotta say. So I'm going to leave it here. I think I've gone through each. We basically have 3 scenarios, all wrapping itself around a very small area of the market. But what the result could be is much bigger moves. All right. So the next Elliott Wave Daily will be on Monday, September the 16th. Have a great balance of the weekend, everybody.